despite those getting back to the markets, despite the housing starts numbers and the markets getting hit by that, I want to get to my next guest. He says there's even more upside on the horizon in the economy and also in the markets. He's Larry Kantor, head of research at Barclays Capital, and was one of the first economists to call the end of the recession in March. And only time will tell whether or not you are correct. But Larry, of course, a lot of people wish that, in fact, that is going to be the case. And Larry, by the way, is in London, but talking about the U.S. here. Larry, with what happened here so far with the housing starts numbers and what we've seen with the jobless data, it's hard to imagine that we're going to see a jobs recovery anytime soon.
Well, I don't think it's hard to imagine. I mean, first of all, jobless claims, which we get on a weekly basis, have continued to decline. Payrolls are still going down, but at a much smaller pace than they were going down before. I mean, at one point, we were declining almost 700,000 jobs a month. Now it's around 200,000 jobs. Now, you're right, the labor market is still weak, but we've had an enormous surge in productivity growth. In other words, output is growing much faster than hours worked. It averages over 8% productivity growth in the last 2 quarters. That's not sustainable. One of two things has to happen. Either demand's going to falter and output's going to go back down,
right,
or employers are going to have to hire workers to keep up that output pace. We think it's the latter, but we've got to see it to believe it. In terms of out of recession, that's done already. I mean, the third quarter was up. I think just about everybody thinks the fourth quarter is going to be up.
You don't see the risk of a double dip at all?
I really don't. What we've got now, just as we had a very powerful negative feedback loop from financial markets to the economy before March, now we're in a positive feedback loop where better economic data doesn't mean every day the data is better, but better economic data, better economies helping financial markets, and the stabilization of financial markets is helping the economy. We're in that. Anything's possible, but to get a double dip, you need some negative thing to happen. Some bad thing has to happen to the economy to get you going down again, because we were already seeing almost every area of spending turn up.
Hey, Larry, excuse me, let me ask you to put on your forecaster hat for a minute, something you do very well. And that is, we're told that we need to create 120,000 jobs a month just to accommodate the fact that the population grows. At what point do we start doing that? Because that, even if we're still just back to flatline, as we say, we have to create those 120, and then we have to reemploy the others. So when do we really get the meaningful growth?
Yeah, I would expect to see that before the end of the first quarter. You should be seeing positive job growth, so you get at least a stabilization in the unemployment rate. I actually think before, around the turn of the year, December, January, payrolls should average around 0. So, at least the job losses will stop, and then sort of by the end of the first quarter, you should see significant job growth.
Larry, just very quickly.
And if you don't, you are going to get a faltering.
Larry, I just want to ask you, obviously a lot of people are talking about the asset bubble concerns out of China, and yet there's an argument that money's going to continue going in there. In a word, you think the money's going to continue to flow to markets like China?
Right now, I think yes. Not just China, but Brazil, other places. Borrowing rates are incredibly low right now, as you know. I mean, the Fed's still got rates at 0, and Chairman Bernanke's told you it's going to stay that way for a while. You're not getting paid to stay home in treasuries. And so that encourages risk-taking. Also, China's economic growth is very, very strong and is going to remain strong for a while. So I think the combination of the positive economic dynamics, the low borrowing rates, is going to keep that up.
Larry, we are out of time, but thank you so much for joining us. Larry Kantor of Barclays Capital.